Thank you. The first quarter of 2016 has already seen a number of headline events, a number of emerging trends that are really impacting our industry. Consolidation in the market, fluctuation in oil prices, change in demographics, and frankly, Graham has worried me enough that I'm wondering whether I shouldn't go off and rethink my retirement plan right now. I'm very privileged today to be joined by what I think is the ideal panel to discuss how these events are going to impact our industry, and also to get their insights into some of the challenges and also the opportunities that we can see in the future. So please, ladies and gentlemen, join me in welcoming the panel. I have Geoff Ballotti, President and CEO of Wyndham Hotel Group, Gaurav Bhushan, Global Chief Development Officer of AccorHotels, and Sita, CEO of IFA Hotel Investments. Welcome, gentlemen. Gaurav, I think I'd be remiss other than to start with yourself. You're living and breathing through consolidation at the moment. How important do you think consolidation is in this industry, and how do you think it's going to change the landscape going forwards?
Look, we think it is on its way. We're already seeing a lot of consolidation. Consolidation gives you scale, and we do think moving forward as a hotel company, as an asset-light driven growth model, scale is going to be important for a whole variety of reasons. But I think what's important is that the consolidation, and when you're in this sort of M&A consolidation mode, it's still got to make business sense. It's still got to be complementary to what you're doing. It's still got to drive sensible synergies. It's got to make business sense. I mean, consolidation for consolidation's sake is going to lead to trouble. So I think people have just got to be mindful of that. And scale's important, but so is common sense and business strategy.
And Geoff, perhaps I can ask you to expand on this a bit. I mean, you've grown through consolidation. You manage over 650,000 hotel rooms. Is there space for more, or are we creating just a bigger and bigger divide between the big groups and the smaller operators?
No, I think there's absolutely room for more consolidation. One thing you didn't mention is consolidation gives us great new talent. And I just met some of your development team out there that used to work for Guido de Wilde and I at Starwood. It's amazing how small this industry is. Francois Baudin has very nice things to say about his new boss. It brings great talent to our companies, and it certainly has allowed us to, through consolidation, pick up some great new talent. We're a company that has grown through acquisition. Every one of our 16 brands has been acquired. We just acquired a great new brand last year. You asked me in the prep, could we acquire more? And there's absolutely room for that. It provides scale, scale for our owners. So many of our owners are here in this room, new owners, and owners that we're trying to attract to join us. And I think what's happening with this industry, whether it's Accor's acquisition of Fairmont or Marriott's of Starwood or Wyndham of Dolce, it is providing the owners of those hotels lower distribution costs, better technology, and just great operating synergies to drive both market share and operating margins. Okay.
And Joe, as an owner, is that what you're seeing?
Yeah, I mean, certainly that's the pitch that comes from the likes of my panel colleagues here. And so yes, I do believe in it as well. As an owner, I think there are obviously pros and cons, and I've caught up with a number of my counterparts in this part of the world who own hotels with multiple brands where they're now going to come together, and the jury's out. It's really split down the middle. Some of them are saying that it's a positive. Occurrence, and it's going to work well for the reasons that have just been mentioned, the distribution systems, hopefully less reliance on the OTAs that obviously cost owners a lot of money these days, the ability to drive down those costs, the synergies and so forth. But on the other hand, there's competition. So suddenly if you have a, like we do, a Fairmont hotel, and you've got a comp set that comprises of a number of other hotels, of which one of them might be operated by the company that's taking it over, then there's clearly going to be a conflict there. And who gets the priority and how does that work? So those are things that we're going to have to work through, as these consolidations get implemented. And I'm sure there's better minds than mine that are working on that, both on the Accor side and on the, in the case of Marriott and Starwood, on the Marriott side.
And you've all mentioned brands, but going forwards with a younger population, with the millenniums, how important are brands going to be?
I think they're critical. I know there's a lot written about millennials being brand agnostic, that millennials do not care about loyalty. We just talked about our daughters living to 100. I hope that's not the case. I have 4 daughters, and I can tell you they are the most brand loyal individuals I know. I was saying to one of our owners last night, my youngest daughter will only think there's home, there's school, and there's Starbucks. And whenever I'm looking for her, she's at Starbucks, because she is just so loyal to that brand. We'll drive out of our way for brands like in the United States, Chick-fil-A, or shop at Lululemon. It is, I think brands are very important to the younger generation. And brands that do it right, and loyalty programs that do it right, have a great opportunity. And back to your point, Alison, on consolidation, I think these big brand loyalty programs are very, very important. Marriott Rewards, I think, is leading the way. We're close behind it, and would love to be the brand loyalty program of choice. But they are so important. Joe talks about the rising distribution costs through OTAs. It is our most important weapon right now. Yep. And I know Sebastian and Accor are working very hard on their loyalty program. I think it's critical.
Very much so. I mean, I can only second what Geoff said. We absolutely think brands are vital. We've just put a lot more money behind that theory. So we definitely believe in that. And we are, in the digital era, contrary to what a lot of people think, I absolutely believe they become even more important. Because when you're on the net looking for an alternate, looking for accommodation, looking for flights, that recognition of what the brand stands for becomes even more important than it was before, because there's no one doing a pitch to you. It's not a traditional travel agent sitting across the desk. It's you're making that decision based on what you know of the brand, what you know of the product. So it is absolutely fundamental, as is loyalty. We are working pretty hard on it. We started out later than a lot of our American counterparts, but we'd like to think we're doing a pretty good job. We've got a strong loyalty program, which is going to be bolstered further by the very valuable program that Fairmont Raffles run. So we're certainly heading in the right direction.
And we'll come back to OTAs, but just to pick you up on the loyalty point and to play devil's advocate, and I'm hoping Joe might back me up on this. We're in more of a digital age now. Shouldn't the loyalty schemes be more flexible? Shouldn't we be able to convert points more quickly? Should it really take 3 days for points to come onto your program and to individual statements? Is there a way to make them more flexible, who you can swap them with?
Do you want to take that?
You want to take it, Joe? Yes, you.
I don't run a loyalty program. I agree with you completely. Yeah. It is very frustrating, and unless I'm a very loyal Emirates customer. I have quite a high status with them, and so I know I can usually use my miles to get it. But I know people who are even at gold level or platinum level struggle so much to use it, and I don't try with hotels because I tried once and gave up. It was too hard.
No, loyalty programs have become, and I think my competitor here, they're doing a great job with their loyalty program, but they have, to your point, they become too complex and they become too complicated. And most importantly, they've been devalued. Most of the big loyalty programs today have created what are called redemption award levels or tiers.
Yep.
And that's what you're referring to. And that's why Joe's frustrated. Joe can't get, he has all these points, but because he's blacked out, he can't get through whatever program I won't ask on that vacation. And so what the challenge is for all of us, to your point, is to step back and make them less complicated, to make them more easy for you, as you say, on your mobile device, to get those awards the day of redemption. Because loyalty, when done right, there is so much research in this industry that shows that loyalty, when done right, is the most powerful tool that we, as hoteliers and owners, have in our toolkit. Loyalty, when done right, 80% of frequent travelers are influenced by their loyalty program. And look at the airlines. Look at the success of the three alliances, One World, SkyTeam, and Star Alliance. Now, I flew Emirates yesterday from Newark nonstop to Dubai, and I was very disappointed that Emirates is no longer, I think at one point they were part of Star Alliance, but I was delighted to find out that Emirates is just partnered with JetBlue, and I was earning JetBlue points. And that put that sour taste in my mouth that I wasn't getting my points on the way over on that Star Alliance I am so loyal to. But I will fly out of my way on United, as much as that pains me, because it is nowhere near the experience, as we all know, that Etihad, Qatar, or Emirates will provide. But I will do it because that status of being global services is so important to me. And God forbid any of us, whether we're SPG members, lose our platinum status, or whether we're Star Alliance members, lose our status on United. That's the magic of loyalty when done right. We took a step back and said to ourselves, how do we make it simple? We eliminated the award levels. We have one simple award criteria, which is 15,000 points. And for 15,000 points now, you could stay at any of our 8,000 resorts that used to cost 90, 80, 70,000 points. Your point is spot on, Alison, is to make them less complicated, to make them more rewarding, and to get Joe Sita over here to be able to use his points and not say on a stage like this that he gave up.
Let's talk about the elephant in the room, the OTAs then. If we look at a region, online travel is growing. It's growing faster than GDP. It's maybe not as fast as what we're seeing in some of the other regions. You know, probably only 40% of bookings are made online, but of those 40% that are made online, over 75% in Dubai are made through OTAs. You know, what are the tools that we've got to compete against OTAs? In fact, should we compete against the OTAs, or should we be trying to collaborate a lot more? What is the tipping point? Gaurav,
you want to take that first, or I'm sure I'll have a view?
To.
Yeah, why not? I'll follow you.
You want me to go?
Yeah, sure.
Well, look, I just was talking about it. Loyalty is the most important tool, again, in our tool chest, because for all of you hotel owners in the room, you do not award your SPG points or your Marriott Reward points or your Wyndham Reward points when booking on OTAs. And I don't think Accor's program, and I hope none of that ever changes. The most talked about over the last 48 hours for me here, or last night and this morning with our owners, is just the point you raised in terms of that rising cost of OTAs. The good news is that what used to be for us a 25% commission continues to come down. Yeah. Booking spends $1 billion a year in advertising. Booking is now effectively 10 points below that 25% commission. And as more OTAs come into this market, we've seen the advent of TripAdvisor coming in with Trip Connect, with all of the other Altraveos and VRBOs and HomeAways and all of the other distribution points out there. That OTA cost continues to come down. It needs to continue to come down and should come down to where retail travel agency rates have always historically been for us, around 10%. But your question is, should we give up? Absolutely not. Do we need to battle it? Yes. Is it the job of the brand and the brand manager to be negotiating on behalf of all of its owners the lowest OTA rates? Absolutely. And again, it gets back to your opening question, which is, does scale matter? And one of the big benefits, I'm sure, and we've heard Arne Sorensen speak very openly about it, that the combined merger of Marriott and Starwood will allow is that negotiating leverage. Back to your first question, does scale matter?
Yeah, very much so. In fact, we, sort of going a bit further from what Geoff was just saying, that's our job. Our job is to drive the customer to the door in the cheapest, most efficient possible way for the owner of the hotel. And as part of that, we have to have direct distribution. It's fundamental to the value we bring as a hotel company and the value that reflects squarely on the bottom line of a hotel P&L and has a big impact now. I mean, distribution costs, I mean, digital distribution is now somewhere between 60 to 80% of all distribution in big capital markets and gateway cities. So it is a real big cost to an owner and a real issue. We've actually gone a step further, and we've launched what we call Marketplace, and Marketplace is actually driving through the AccorHotels app, through the AccorHotels online platform, unbranded hotels, in addition to what we do with our branded hotels. And it is, in the end, about driving scale. It's about driving enough traffic through your online platforms to enable benefit to your entire network. And we absolutely believe that that initiative will have a positive impact for all our hotels, including the branded hotels.
Joe, I have to ask you from an owner's perspective.
Yeah, and I mean, as I said at the beginning, that's one of the benefits I see of consolidation, and one of the reasons that I tend to support it. As Geoff just said, it's not as though, and Geoff and Gaurav, we're not saying from an ownership perspective that we don't see a place for an OTA. Absolutely not. And that's right. They spend billions of dollars between them and Expedia and all of the various OTAs, billions of dollars driving customers to their sites, and their sites are incredible. If you go to any of the OTA sites, you've got interactive, somebody there that can respond to an immediate request. You've got things flashing at you all the time. I mean, it's just a tremendous experience, which I don't believe any of the hotel brands have yet done, and they don't have the investment dollars. I mean, obviously, the hotels have a lot more to do, so I understand the economics of it. So I'm not saying that an OTA shouldn't be there. We've just got to get their cost down to a manageable level, and that traditional 10% is what we used to pay travel agents as opposed to the online. That's reasonable, and I think with the scale and with the pressure that the consolidation can bring, and with unless there's further consolidation in the OTA business, where they just get larger and get much more difficult not to deal with and start raising their prices. That's what we've got to work towards. Yeah. And if we're all on the same page, then I think that can be achieved, because OTAs, they're here to stay.
Here to stay, yeah. And I think you're absolutely right. I mean, they've got the technology, they've got the money to invest, more so than operators themselves are going to have. Particularly your smaller operators that are operating even in the 1 or the 2-star hotels. They're never going to be able to compete against that. So there's got to be a way of working with them. If we're talking about technology, we've heard about digitalization, we've heard about big data. What does digitalization mean to you as an operator? Where do you see that going? We hear about it, but do we really understand what it means and tangibly what it's going to bring to the hotels?
Look, I think it means a lot to us. I mean, as a group, we announced more than a year ago investing about 225 million euro into our digital platforms over the next few years. It is a huge commitment. It's fundamental to our business. Absolutely fundamental. It is one of the mainstays of the value that we bring, and then it comes down to, again, one of our key jobs, apart from managing the hotels well, is bringing the guest, bringing the customer through to the hotel in the most efficient way possible, and digital is one of the key ways that you can do that. Digital distribution and loyalty are absolutely fundamental, we believe, to where the industry is going. And we're investing heavily in that side. Apart from the hotel distribution side, we as a company are also investing in different digital ventures. We have now made a move into private rentals. So we absolutely believe that digital is going to be a mainstay. a digital distribution, and the way our industry is evolving is it's going to be an absolute foundation of what we do as a hotel company, and we're investing heavily in that side.
I know Geoff as well, from a technology platform point
Yeah,
of view, you're doing a load.
Yeah, I'm sure the acquisition of One Fine Stay, that's a great website. You're going to learn a lot from that, and we could learn a lot from some of these younger companies that are out there. And I think that's one of the issues for all of the hotel companies, is the legacy systems on which this digital platform sits. I mean, there's digital, there's our desktop, there's our tablet, there's our mobile. I think all of us are focused right now on our mobile, because that's the booking path of the presenter that was just presenting on where this industry is heading. But we need to start with the infrastructure. We need to start with the guts of our system. And we made the very strategic and conscious decision 2 years ago that we, Wyndham Worldwide, should not be in the business of developing central reservation system solutions or software. That there are much bigger players out there like Sabre, which is the most connected CRS on the planet, with whom we partnered to move our guts of the system to the cloud, to move in a secure cloud-based environment, both our property management and our central reservation systems, with world-class, best-in-class software cloud-based providers like Sabre, like Elevon, like Infor, which is providing our automated revenue management systems. We're beginning that journey. We've installed 500 of our 8,000 hotels onto the platform. By the end of next year, all of our hotels will be on that platform. But as Gaurav said, digital is where all of our resources are at, and from a primary focus standpoint right now, it's on the mobile.
Okay. If we move to the growth of Dubai, and where we're looking to, I guess, change some of the hotel landscape, is really investing in that mid-market arena. We have all of the luxury brands. We are known as a luxury destination, and that's similar across the rest of the GCC as well. Mid-market hotels are more of them coming into development, but it's probably slower pace than what we were expecting 2 to 3 years ago. What are your thoughts on what is maybe making that slower than our expectation? Why are people maybe a little bit more reluctant to invest in those lower star hotels?
I'm not sure it is as slow as people think. I think that it's always about highest and best use. So whilst, and as we have heard today, because it's very relevant, STR announced that Dubai was the highest RevPAR market in the world for the first quarter. I mean, that tells you immediately that there's still demand at that high level. And it also tells you, as you rightly say, that we don't have enough of the mid-market, and that's what's driving that rate higher compared to other markets around the world. But, whilst you've still got land in prominent locations and opportunities to drive high rates, then those opportunities on a highest and best use real estate basis are going to be taken up by the luxury or upper upscale brands, and then the others are going to follow. I believe you'll find that trend is going to change over the next 5 to 10 years. Because the opportunity for those, it's like any development. Go and try and find a prime site for a luxury or upper upscale hotel in New York, Paris, London or Rome these days. Yeah. They don't exist. Or you've got to convert something. In Dubai, in Abu Dhabi and in the region, you've still got those opportunities. And whilst they're still there, people are going to say, well, that land is expensive, and if I want to get my return on that land, I'm going to need to bring that sort of hotel. But as that gradually builds out, then the opportunity will be greater.
And is some of the solution to that some more flexible offerings? Is it moving away from just the standard hotel to timeshare, etc.? Do you see us moving in that direction in the region? Absolutely.
We, Wyndham Worldwide, and Joe is actually an RCI customer.
And partner.
What's that?
And partner.
And partner, yeah. Joe's one of my, one of Dimitri Manikis. I don't know if he's here in the room. But RCI is the world's largest timeshare exchange provider. RCI has been in this region for years. There is tremendous timeshare development in other parts of the Middle East. Egypt is a huge RCI market for us. Joe's developing on the upper end of the luxury sphere, and that demand is there, but there's certainly middle market demand. And the mixed use market is so powerful, and so many of our owners who we talk to that are looking at the opportunity of, as they look at a piece of land, developing not only a hotel, but also timeshare, and selling that unit that would ordinarily sell on a nightly basis for a lot of money 52 times, either through a single deed or through a point scheme, is a very, very powerful model. And we believe, which is why I'm here, you asked me why I'm here, it's that this market from a mid-scale, from an economy and from a mixed-use basis just has tremendous potential. 8 of our 16 brands are here, but our big economy brands aren't here the way that we'd like them to be. Days Inn, which is one of our biggest brands in the United States, which is where all the Asian American investment dollars have begun and grown up through the United States. We've got great new prototypes. We've talked to a lot of developers last night and this morning, and we will for the rest of this week. There is great potential on inbound tourism and inter-region tourism for the economy and the mid-scale brands. And I know Accor has got some great mid-scale and economy brands as well that
yeah, we've been very active in this space, you know, where we have about 75 hotels and 20,000 rooms in this region, and about 60% of our network here is actually in the mid-scale and economy space. So and the pipeline continues to grow. You know, with, you know, it's when you look at the macro picture for this region, for Asia Pacific, very similar. And you know, when you look at the travel trends, the boom in low-cost travel, which is becoming even better now, given where the oil prices are. I mean, the mid-scale and economy market is going to continue to show great growth. So we want to be ahead of the curve. We've been developing, very actively investing in our brands here for a while, and we see great potential. Like I said, the majority of our network here is mid-scale and economy.
Yeah, and I guess, you know, with the opening of the parks as well coming up, that's going to have a different demographic of customer coming in.
Exactly.
Absolutely. And when you take on the bigger markets in this region, whether it's Saudi, whether it's Iran, the opportunities are really scalable.
Yeah, and we own the Yotel brand as part of our portfolio. And we've got 2 Yotels now under development in Dubai, one on the Palm, which we're developing ourselves, and one on Sheikh Zayed Road here in the Business Bay area. So both large properties. You know, in the case of the one on Sheikh Zayed Road developed by others, it's a mixed-use project. It's a hotel, a branded service department, Yotel branded, and some resi as well. So it's definitely coming, and you know, we'll be one of the first brands to bring a mid-scale effective offering on Palm Jumeirah, on the crescent of Palm Jumeirah. There is another project, I believe, an element that's underway there as well, but you know, you can see that the market is stratifying, and it's just a matter of time.
That's a phenomenal brand. I'm curious, how many people have heard of Yotel? Wow, everybody. That's awesome, Joe. And if you're ever in New York and you don't want to stay at an Accor or Wyndham, the Yotel in Times Square. Joe and I had lunch there the other day. Beautiful hotel.
We've touched on changing demographics. You know, we're going to see more of that over the next few years. That's going to lead to different expectations of customers. We all know how important online reviews are. You can't get away from them. Social media is everywhere. What are the operators doing to really address the types of reviews that are coming out? Are you doing enough? Are you just responding to the reviews? Are you reacting to the reviews?
Look, I think you've got to do more than react. I mean, it's the level of transparency is at a level that we've never seen in our industry before. You know, as an operator, the GM's has to understand that his owner and his customers are seeing exactly what people are saying about that hotel, good or bad, at the same time as he is. You can't manage that information. You can't duck and weave around it. It's there for everyone to see. So you have to be proactive, and it really, I think, pressures and focuses operators to make sure that they are doing the job they should be doing, because you know, you can get some pretty bad reviews, and there's nothing you can do to hide behind anything. So I think it's a great thing. I think that level of transparency just brings about a level of service quality, a level of efficiency, which we as hotel companies need to deliver. That's our job. And the GM absolutely has to understand that this is real time.
Amen.
You can run, but you can't hide.
Yep.
In this internet transparent age in which we live, I don't think any of us, how many of you in this room check the TripAdvisor review before you check into that hotel? Well, quite a few don't. With our new president, Dan Ruff, he checked me into the new Wyndham Marina Bay the other night. The first thing I did was pull up our TripAdvisor review scores for the new Wyndham, and a beautiful new hotel. And what amazed me most, to your point, is our general manager there, Roger Herkens, who came down from the Netherlands to be our general manager, responds personally to every single review. And it's 4.5 out of 5 stars right now on TripAdvisor, and he's upset with the review that he doesn't have any terribles yet, but one not very good review that he's received. And it just amazes me the number of GMs, to your point, that don't do that. So to your question, our job from the brand side is training. And it's also enforcement. We do a lot of takeovers for our mid-scale and economy brands in the United States when those reviews aren't getting responded to. But it's table stakes. It's critical.
And from an owner's perspective, Joe, I mean, how much emphasis do you place on this? What are you doing with the reviews?
You know, it's really just a matter of monitoring them. If there's anything that we see a recurring pattern on, clearly that's something that we want to deal with quickly. But essentially, that's one thing I think the big operators do very well these days. You know, they have a lot of their KPIs, or a significant number of their KPIs, all are revolving around that. So that general manager and that management team know that they need to get that right. And that's one area where I think that the brands do monitor it, enforce it, and it's because it's so technology based. They can actually do it without requiring them to actually be there on site. So that it's a system that they can monitor remotely. And so it's you know, it works well. So unless we see a recurring pattern or whatever, we typically leave it to the brands. I mean, we see the scores, obviously, and it's you know, when the scores are good, all of the operators love to say it's in the executive summary of the monthly report. You know, we're number whatever on the TripAdvisor report, and that's great. You know, we're happy to see that.
I mean, we're seeing a lot more development in that area and a lot more proactivity to it. But the statistic that came out the other day that still says, you know, only 14% are using in-stay reviews. You know, everything else is at the end of the stay. You know, so I know companies like Expedia are trying to introduce more things so that after check-in, you can do that immediate review and make sure everything is fine, so it can be addressed before that bad review comes online later on.
Yeah, I think that, you know, the days of complaints as such, where people would only be typically motivated to burst into print in some form because they had a bad experience, are gone, because it's so easy now on the mobile platforms. So I think today people can pull it up and very, very quickly, you know, in the cab on their way out, or while they're sitting around the pool or having breakfast in the morning, they can provide their responses. Because, you know, in the early days, it was really just complaints. We used to have in the hotel area complaints departments. Right? That's the way they were set up. Because it was only the people who complained. You very rarely got, you know, the old guest questionnaire that said this was a fantastic experience. Actually, that's what you did get. You got extremes. You got great experiences or bad experiences. You weren't really capturing what most of the people were experiencing during their stay. Today, that's different.
And do you think we'll get to a point, or maybe the question should be, would you like us to get to a point where customer satisfaction scores are part of hotel classification systems, more linked into metrics in the HMAs?
Absolutely. And what I think, to Joe's earlier point, I could only talk on behalf of our brand, we're beginning to use it as part of our QA. You talk about the metrics, and it is actually making our quality assurance testing. We were 44,000 rooms left our system of 680,000 last year that were substandard. that QA process is becoming easier because of the transparency, because of the internet, because of having no room to hide if you're a bad operator.
It actually works both ways. What's interesting is because it's all out there, and if the hotels are not in good shape, you're going to know about it, and the owner's aware. The owners are then aware, and it helps the operator talk to the owner to say, look, we need to fix this part of the hotel because that's what your customers are saying. That's what our customers are saying. So it actually is the transparency is fantastic because it also helps the owners communicate together with the operators and vice versa to make sure that the owner's side of the obligations, which is effectively to keep the hotel to the brand standards and to good shape, is there to be done as well.
I'm seeing this clock flash down very, very quickly in front of me here, so, and I want to leave some time for questions. So just one more question. Obviously, we've got Vision 2020 in Dubai. We've got the Paris Agreement that's just been signed. You know, how as an industry, are we on track here in Dubai to meet the targets that are being set more broadly across Dubai? Is the industry working together?
Let me take that first because obviously I live here and see it every day, and I think it's been well addressed on some of the previous panels. So I don't think we need to spend a lot of time on it because I'm in violent agreement with what's been said. I think we are on track with 2020. I think with the lift, and we heard Thierry talk about the number of A380s Emirates has got on order. We've heard about the theme parks, Marvel and Dubai Parks and Resorts that are coming that are just going to completely transform the landscape in terms of demand generators. We can see just driving around the infrastructure works that are continuing to go on. All of that, and obviously then culminating with Expo 2020 as obviously a very large demand generator. Yes, while we have got a 50% increase in supply coming on, and whilst we are challenged these days on room rates, to a large extent, or to some extent, because of the geopolitical and the global economic situation as much as anything else, exchange rates and so forth, strength of dollar. I am very confident and bullish on the Dubai market, and believe that it is on track to meet that vision, and that whilst there'll be some challenges along the way and some short-term pain as this supply comes on and it needs to be absorbed, I think ultimately we're on the right trajectory.
Perfect. I'm going to open the floor for any questions.
Yes, my name is Anil Bhardwaj, Renko Group Dubai. I'm going to give you an owner's viewpoint now on some of the points made on consolidation and OTAs. Let's face it, the primary reason consolidations are happening is because of the stock market price of the brands. That's the primary driver. Owners' interest may come into the equation sometime in between, but that is not the primary driver. When we talk of, and things have been mentioned about how consolidation will bring down the cost, for example, of OTA commissions and loyalty programs will also help to bring that down. But let's not forget here that over the last 10, 15 years when we signed these agreements, that was one of the main objectives of what these operators were supposed to deliver, the top line. And suddenly, these big camels stuck their neck into our tents and started taking away 20, 25% of our top lines. So, and we have paid millions and millions of dollars over the years for these sort of commissions. It's nice to hear that these commissions are coming down, but the point is, there is still a lot of skepticism, and it's too little too late. The bigger question is, why are not the bigger operators, when they have got all these nice agreements with owners all over the world, why are they not putting their heads together and coming up and eliminating these middlemen who have really no role to play? That is the bigger question. So that these steps that you're talking about, which will again take another decade, and by then we'll have paid another few $100 million. It's there where you need to think out of the box now and, you know, somehow address this question.
Do you have a suggestion on how we would do that?
Well, you, as I said, you will have to all close doors and get all the top presidents and CEOs together and say, why don't we have, I believe you did attempt that, hotelkey.com or something like that.
Roomkey.com.
Roomkey.com,
Right.
whatever. But somehow it failed. As an owner, unfortunately, we don't know exactly why it failed. Maybe another attempt, you know. Please think, the owners are the ones who are paying the price here.
Yep, point taken.
Yes, you are also paying that
Yeah.
to a lesser extent. We are the guys paying the 90% here.
Yep.
And it's very important that that comes into the picture.
Okay, thank you.
We all know that the technology is evolving at a much dynamic pace as compared to a very static 10, 20-year-long management contracts. How do you think, with particular two references, A, the IP, the other technological advances, and the fee structures, how do you think the management contracts would evolve, both for the owners and operators?
Yeah. I think that's a great question. You're signing up to very long agreements, much longer than you see pretty much in any other industry. Is there enough flexibility in them, given the changes that we're seeing?
Yeah, look, I think it's an excellent question, and maybe I can start off, but Geoff would appreciate your view. But yes, you have to build in that flexibility, because this landscape's changing every few months, let alone every 5-10 years. So you need that flexibility to be able to sit down and discuss that fee structure, because in the end, that fee structure has to reflect the realities of the market, and that market is changing constantly. So, but you need to do that in a transparent way and be able to demonstrate that what you're charging to the hotel is consistent across the network, or is consistent across a region, and it is in line with what the market landscape is. If you can't demonstrate that properly and transparently to an owner, you're not going to get that across the line, doesn't matter what's written in the agreement. So for me, yeah, you can build the clauses in the agreement, but then it's about actually demonstrating in an honest, transparent, commercial way why that change needs to occur based on what's happening within the world of distribution and within the general industry landscape.
Couldn't agree with you more. And delivering on the promise on the question on.
Okay, I think we'll wrap up there. I know it's lunchtime, so gentlemen, thank you for your time and your comments.
Thank you very much.